What's up, you guys? It's Matt here. So, thank you for joining me on another NFA video. I think that this should be a short one. We're pretty much just going to talk about inflation within this one. So, if you guys like this type of content, make sure you hit the like button, hit that subscribe button, hit the notification bell for more videos like this one. Also, make sure you check out some of the links down below. It does help out the channel. And if you guys want to follow me on Twitter, follow me on Patreon, those links should also be down below as well. Now, inflation is a big deal. It's a big topic because the more that it costs for us to spend money, like obviously, the more we want to just continue to save, right? If things cost way more, I don't want to spend money. I don't want to sit here and buy, a box of cereal that's $10 or anything like that, or spend, $5 per gallon on gas. Like obviously, I don't want to spend money there, but on the things that are necessities like food and like gas, you're gonna have to. And obviously, with inflation, with higher costs, we just don't want to see it. But with all the spending that has been done, the lockdown, and which I don't understand, record high revenue for businesses. People aren't making more money, but it's costing a lot more in order to, live your normal life. Like even the point of like the interest rates, right? People going out and buying houses, it may cost them a crazy amount. Actually, I feel like putting out a video of how much the difference will be if you took out a mortgage today versus taking out a mortgage when I took out my mortgage, right? Because my price or my mortgage is a lot lower. But if I decided to wait, or we decided to wait and waited until like this year or last year or whatever, we would be paying a hell of a lot more. So inflation is a big deal. It's a big topic. So I wanted to kind of go into this right here, right? Inflation rises for the second straight month in August on higher gas costs. Scroll down here. Inflation accelerated for the second straight month in August on a spike in gasoline prices, and an underlying measure of household expenses rose more than anticipated, highlighting that the Federal Reserve battle to tame consumer prices may not be over. Goods such as cars and furniture kept drifting down in price, partially offsetting the climb in rent, travel, and other services. Inflation data this week. Now, consumer prices rose over 3.7, rose overall 3.7% from a year earlier, up from 3.2% in July, according to the Labor Department Consumer Price Index. That's the second straight bump after 12 consecutive declines in annual inflation. Now that was huge to see the 12 straight months where we were seeing the inflation rate or inflation and interest rate decline. That was great to see because obviously I thought that was going to be very bullish momentum. But then you also have a lot of people that were like, look, we're going to see a rise that's coming soon. Once we start to see them back off of raising interest rates and start to steady out on interest rates, we're going to see that the overall CPI data will come back as, start to climb rather than decline there. So that was definitely interesting to come from that, because that does make sense. On a monthly basis, the prices increase of 0.6% that followed a 0.2% rise in July and marked the biggest jump in more than a year. The chief culprit was the surge in gas costs. What is core inflation? Core prices, which exclude volatile food and energy items, and which the Fed watches more closely, are still elevated, and rose by 0.3%. Economists expect a repeat of the prior month's 0.2% advance. The rise still moderated the annual increase to 4.3%, down from 4.7% in July, the smallest gain since September 2021. The inflation genie is not yet back in the bottle, says Jason Sheeker. I don't know how to say his name. Schenker, president of Prestige Economics. Will inflation go down? Annual inflation has slowed notably after hitting a 40-year high of 9.1% in July 2022, but lowering it the rest of the way to the Fed's 2% target is expected to pose a thornier challenge. Never heard that word in my life. Thornier challenge. While goods prices have fallen, and as pandemic related supply chain bottlenecks have dissipated, the cost of services such as car repairs and recreation have leaped, uh, chiefly because of chiefly because of the increasing employee wages. I mean, I don't see that. Where have the increase have come from, right? I mean, obviously, I wouldn't see it because I'm not a person that works a 9 to 5 anymore. But from the people that I've talked to, that has not come. And you've seen increases from new people that are getting jobs. Maybe that's probably where it's coming from. The new people that are looking for different positions in different companies or same positions in different companies, they're getting hired for more as people that are close to me would tell me as well that they're getting hired for literally like $5 to $10 more than what these people are making. And that's insane to value someone new more than someone that has already been there. But I guess I already know that that's how it always worked. As somebody that has gone through, you know, trying to find a different position, they would hire me for more versus pay somebody that's already there for to do that job. Obviously, they're already doing it, so it's I don't know. New people are what companies look for. So, will the Fed raise rates again in September? As a result, Barclay expects the Fed to raise its key interest rate once more this year by a quarter percentage point after lifting it by 5.25 points in 16 months. That marks the most aggressive inflation fighting campaign in 4 decades, which is understandable. Like, we dealt with a pretty big pandemic that shut down the entire country besides big businesses, honestly. So I can understand why that has happened there. But raising the interest rates is not going to be good for anybody that's looking to get a house, and nobody's going to want to I'm not going to say nobody wants to do it because people will still do it, but you would need to be making a significant amount of money in order to purchase a home. Eventually, the interest rates will come down and you won't have that much of a cost because literally it's like, you know, you would pay, maybe $900 for a mortgage back then, like say when I bought my mortgage, and then you would pay, or when I bought my house, but then now you would pay $2,000 or $3,000, not including the taxes, and it may be even more than that, depending on what the price is, obviously. So, yeah, I just wanted to talk about inflation numbers with you guys, and go over that since I haven't really done that. And typically I do it through a live stream, but I couldn't do it this morning because this little lady woke up pretty early today. So, anyways, guys, let me know what you think about inflation. Hit that like button, hit that subscribe button. I'm gonna get out of here, and I'll catch you guys in the next one. See ya.